Crude already sub 100. Can it sustain?
Look, we certainly don't think so. If you have a look at what's driven it down there, yes, the concerns about a recession. We know there may be a recession, but at this point in time, we don't think it's going to be a deep one. It'll only be mild and will probably fairly quickly pass, or if in fact we have one at all. So from that point of view, if that's what's driving the markets lower, then yes, we will see the oil prices start to reassert to the top side, because the factors that have put them there haven't really gone away. We've still got the Ukraine-Russian war. Yes, we're now aware that COVID is back into China, but of course we have to live with it coming and going, because it never will really disappear. So we do believe that that will again come under control and life will go on. So look, overall, we're seeing the recession word probably being the main driver at the moment, as if we do see that recession, it will obviously destroy demand, and that's what the markets are seriously concerned about.
Peter, hi, morning. What levels are you foreseeing now on crude? And does it seem like 100 could be the new base reality, or is it just an aberration and a knee-jerk that one is seeing?
Well, that's a very hard question to answer, because I listen to what David's saying and I agree with him. I also look at what happened as far as $11 fall, just under $11 fall on Brent, the third largest in absolute terms over a 34-year history. So that's a dramatic sell-off what we experienced. I take on board the US dollar index, and we're back at that 106 sort of 50 number, which we haven't been at that level really since 9/11. I know it went to around about 118, 119. So maybe we're in an upward trend there. The currency markets are coming under enormous pressure. Yen sold off, of course, as we know, and now the euro nearly at parity. So I think that there's further downside for crude. I listened to what Citibank say. $65 could be where we are by year end if recessions really do come into play. So I think it's just going to be very, very volatile. And I'll go out there and say probably an $85 to $90 handle to the downside. I won't be surprised if we hit it.
Okay, so you like the $65 forecast by Citi. You're penciling in $80 to $85. Peter, so David, coming back to you. I understand you may not want to give a forecast. You're saying there's going to be a lot of volatility. But given the ugly recession word, the fact that demand may come down, the strength in the US dollar, and all the recent moves you've seen by the US Fed, are you at least bracing yourself for the fact that for the second half of the year, crude is likely to normalize below $100? Is that the new normal?
We're at this stage sticking to our Brent range of between about $110 to $125. We've got to have a slightly wider range because there is volatility in the market. But we're going to know, I think, probably within the next 2 to 3 months, if we are going to have a recession across the globe. There is certainly, we believe, a lot of slack inside the I guess, corporate America in terms of cash. We've never really seen a recession start from a cash position, and that's one of the factors that we're pushing that would suggest we're not going to see that recession. So if that's the case, then oil's going to very quickly recover. Yes, there certainly is going to be volatility, and as Peter suggested, we've seen that significant fall as soon as the market started to perhaps become overly concerned about the recession word, and throw in the fact that, yes, the US dollar's trading up at 106. That's certainly not helping. But all the factors, again, that we see are pointing to perhaps the US dollar falling. We just need to see its peer currencies actually starting to pull some of their weight in terms of their economy starting to improve. And in some cases, there's some glimpses of that. So look, overall, we're still quite positive on the crude price. Yes, watch out for the volatility, but we think that provides good opportunity to buy in.
Peter, can I ask you about copper prices, the way they have plunged more than 25% in the last 4 months, now, trading at almost, a 17-month low. There's always that
Yeah.
belief, right? Dr. Copper, when we see this with copper, the correlation that has with equities, studies that have been done over the last 4 decades, a lot has been spoken about this in the last few days. Would love to get your views.
Well, you've just got to have a look at what's happened as far as iron ore prices, look at some of the other base metals that have just been hemorrhaged, and copper, down that 4% on the LME, down at 76.70. So you've big softness, big concerns, I think, as far as, that barometer for the condition or the health of the global economy, and the uncertainty moving forward. That's, with the China lockdowns again, with poor growth and high inflation impacting Europe. I really think that you're going to be in for a fairly tough 6 months for some of those base metals. And I think there's further softness yet for aluminium, copper, and certainly for iron ore in the short run.
I look at the crude price, and I looked at last night decline, and asked myself a simple question, David, that hey, crude's gone down, even the war is on. What happens if if there is a ceasefire? We've seen a downtick in crude when we know that supply is going to be crunched. How should one read into that?
Look, certainly, yes, you would have to suggest that that's a concern. But the real big change has been the recessionary word that's now started to come through into most rhetorics that we've seen around the market. We've gone through the transition phase for inflation. It was transitory. We've now gone through the interest rates are going to start rising phase. The last part of that trajectory is, of course, the recession phase, and that's the information that really has changed. And it did catch the market a little bit by a hop, and I'm not quite sure why. Primarily because, yes, all the factors that we've seen to date have always been positive for the crude price. The recession and the China lockdowns have been, we've got to get used to the China lockdowns. They're going to come and go forever. So the market reacting so poorly to that is probably really not warranted, but it is that recessionary word. So everyone will be watching very closely in the oil markets to just see, are we in fact going to have a recession, or can the reserve banks and central banks engineer a soft landing? As I've said, corporate America is well cashed up. We've seen very few recessions start from that sort of baseline. We've got full employment. Very few recessions start with that sort of baseline. And even household debt's not overly burdened. So we're really struggling to see where the recession can get to, if there is in fact one.
David, I read a report from Goldman Sachs yesterday which talks about crude could go to 55. I'm sure you must have read that report. There's another report, David, which hit to my mailbox over the weekend, which is from JP Morgan, and they're talking about crude could go to 180. Who will get it right? I'm not going to talk about Goldman Sachs or JP Morgan, but do you think next 6 months the bulls will get it right, or the bears will get it right?
Well, look, at this stage, you'd have to suggest that we've seen that the bears start to take some control. And of course, we haven't had the bears in control of the oil market since the start of the pandemic way back in 2020. So from that point of view, one would suggest that you've got to give the bears a bit of time to work through the market. We've had such a strong oil market for so long that it may take a little bit of shaking out. But overall, if you have a look at the baseline fundamentals, again, that's where we fall back to. We can't really see any significant change in those baseline fundamentals, apart from the R word has arisen, that's recession. And of course, the US dollar has refused at this point in time to roll over. But we've seen the oil price run against the high US dollar anyway. So from that point of view, it really is, we've got to sort out whether or not we're going to have a recession.